everybody looks at the crisis initially as the end of the world because they don't know how it's going to be managed. So the initial reaction to any kind of crisis is raise cash, sell the market.
Welcome, YouTube. Today is another episode of Money Talks by YouTube. Today, my guest is Kelly Korshak. Welcome back to the show, Kelly.
Yeah, thanks for having me, Aaron. Good to be back.
Awesome. So quarter two apparently was the best second quarter since 1998. Now, I think that is taken a little bit out of context given the situation of the global economy. But what are your comments on something like that? When you hear, CNBC say stuff like that, what are your thoughts?
Obviously, there's a distortion going on in the market right now because of the COVID-19 pandemic that caused the market to go down so much in March, which is really the end of the first quarter, right? So the second quarter, after going down 33% from its peak, the S&P, by the middle of March, it was down 33%. It would be very difficult for the second quarter to be as bad as that was a 33% drop, literally within a matter of maybe 3 weeks when it really just hit the fan. But there is something noteworthy of that, of the 1998. I was a trader on Wall Street at that time, and that was the time in the summer of before the summer of 98, when long-term capital management failed. And it failed because of the Russian ruble disaster that was as a result of an oil problem. So the ruble collapsed. It threw out interest rate yields and spreads in 1998, and that caused the market to go down precipitously. And but just like in 1998, the aftermath of it was that the market realized that it was an overreaction to a Four Sigma event that was going to be short-lived in nature. That remains to be seen in what will happen with COVID. But that was the main thought I had when I saw that actually on many of the different news networks, that the market had done so well in the second quarters. It always took something to make it go so bad in the first. So it's all about managing crises, and this is just another one.
What's remarkable about what you're saying is there was a drop, but it was a little bit of a overreaction and a consequent recovery. Is that how you perceive COVID to be? Or is it too early to tell? What are your thoughts on that?
No, the funny thing is everybody looks at the crisis that's at hand initially as the end of the world because they don't know how it's going to be managed. So the initial reaction to any kind of crisis is raise cash, sell the market. That's just the initial reaction. The other reaction, of course, and the same thing was true here, is buy bonds, because what do? You sell your stock, you have the cash. Cash does you no good, so you have to invest it and turn around and invest it in something that will at least give you a return. So that is what happens in every crisis, whether it ends up lasting a long time or a short time. What'll always end up happening is they will sell stocks and buy bonds. And the idea of that is kind of where Markowitz noticed this when he formed MPT, is to say, you notice the correlation. That's what people do. They sell stocks and they buy bonds, which means the bond prices go up, interest rates go down as a response to give the economy greater strength, because low interest rates is trying to expand an economy.